Welcome back to the Dividend Diplomats YouTube channel, guys. You got your boys, Bert representing the land, Cleveland, rocking that Cavs hat, and Lanny, the Dividend Diplomats, guys, the best dividend investors here on social media. Today, we're looking at a stock that's not a high flying stock. It's not an undervalued stock. In fact, it's kind of a what the stock that is in both Bert and my portfolio. We're going to talk a little bit about where they were, where they've recently been, and kind of where they're at now, and kind of, what I've been thinking regarding this stock.
Love it. But before we do, smash that subscribe button. Give this video a good old-fashioned thumbs up. Help your boys reach financial freedom and help us reach 20,000 subscribers. Let's freaking go, everybody. Lanny, what the heck are we doing today talking about this company? This is going to be a fun one.
Yeah, guys, we're going to talk about Intel stock today. Ticker symbol is INTC. No, don't X out of this video yet. I swear it'll be at least maybe a little bit humorous, as well as kind of hearing our take for, at least what I plan on observing, watching, and monitoring over the next, I don't know, it might take 6 months or it might take 60 months. We'll have to find out, guys. But Intel, I mean, it all starts back when, gosh, well, there was the CHIPS Act that got signed in. Everybody thought these chip companies were just going to boom, and some of them have. I think, Bert, you own another counterpart in that chip industry.
I do. Yes. Yeah. It's not. Yeah. Do you want me to say it or do you want me to?
Yeah, yeah, go
Yeah.
ahead.
The one I own is Texas Instruments, ticker symbol TXN, and that's not the one we're featuring in today's video. And that company's hitting record highs. They're above 200 per share. Things are firing on all cylinders for
Yeah,
Texas
and you own
Instruments.
Qualcomm, I think.
Oh, that's the one you were talking about. I do own Qualcomm. I own both of them here.
Yeah, so you
I
you know,
wasn't
and
even thinking.
Qualcomm's up 50% in the
Yeah, I
last
wasn't even thinking
52 weeks.
Qualcomm. I kind of forgot I owned them, to be honest with you. I was
Yeah.
thinking Texas Instruments. So yeah, I own both of them in addition to this one, who hasn't been performing as well.
Yeah, so then Intel's like, all right, great. We're gonna create this massive multi-billion-dollar plant in Ohio. That was announced about 2.5 years ago. They're building that, doing all of that down in Ohio and Columbus representing guys. Man, it's just like, yeah, I can't believe they're still paying this dividend. Well, yeah, damn right. They couldn't believe it themselves either, because come a year after the announcement to build, they also cut down their dividend, down to the current 12 and a half shares that we have right now. They did that, back in that first quarter of 2023. So about a year and a half ago, they took the legs out from the dividend, going down from that 36.5 cents down to the 12.5 cents. So yeah, very much a brutal runaway there. And then Bert, what's really happened in the last like 6 to 9 months with the Intel stock price?
So Intel rode the tech boom, rode the AI boom. It had jumped up. It was down. So it was after the dividend cut, it hit to I think the low point was in the mid 20s. You can correct me if I'm wrong. But after the dividend cut, it was at like 25, 26. It nearly doubled. It hit $50 per share at the end of December. Since then, things have cooled off for Intel. Forecasts have dragged out. The rosy glasses that everybody's talked about have come off a little bit for Intel. It seems like it's going to be a longer road ahead for their turnaround. And because of that, the stock price has been pummeled ever since then. They are now trading at $32.98. It's been a rough
Yeah,
2024 for Intel.
yeah, a lot of delays here for Intel and for Intel shareholders. A lot of delays, right, guys? And just a quick recap. Revenue at one point in 2019 was trudging along at $72 billion, and actually almost hit $80 billion in 2021. Fast forward at the end of 23, they were at about $54 billion in revenue. Net income obviously going from 20 billion down to about a little less than 2 billion. And then long-term debt has almost doubled since 2019, going from 25 billion to 47 billion dollars in long-term debt. So not exactly what you want to see in a stock, not taking out all any other events, sales, spin-offs, joint ventures, and all that stuff that's happened in between 2019 and 2023, which is not a trend that you want to see, especially on the net income margin standpoint. And that's led, yeah, like Bert said, stocks down 31% this year. It's funny because then you look back at the 52 weeks, they're only down 3% than where they were last year. Because it was such a dog for the most part in
Yeah.
2023, but they really had that surge, as Bert indicated, towards the end of 23 that has made this year look so bad for Intel stock.
And that's what's so frustrating about Intel is It's all built on promises right now. That Arizona plant, that Ohio plant delivering, can they successfully bring the manufacturing back to the United States? They can get off that international dependency. But there's just so much going on. Can you find the workers? Are there going to continue being delays? That's what's really bringing down Intel. The promises and the excitement have worn off, and we're now kind of back to reality. We're back to the reality of a company that has seen its revenue drop, that's seen its net income drop, seen its debt going up. And I think shareholders are finally saying, all right, Intel, let's take a hard look at this company.
And that's what we're going to do, guys. We're going to rock them through the DD stock screener, looking at that current price to earnings ratio, that dividend payout ratio, and the dividend growth rate. We'll look at the dividend yield, and you'll hear our take afterwards, guys. So, as we discussed, Intel is at $32.98. Now, per Yahoo for 2024, expectations is a whopping $1.08 EPS. 30 times earnings right now for good old Intel.
That's so high. It's funny. It's higher than Salesforce that we just talked about on Tuesday. I know they're two completely different tech companies, but it's funny that Intel has a higher price to earnings ratio than Salesforce. Their dividend, now that they've cut it, their annual dividend's 50 cents. We all know it. We're not expecting it to grow anytime soon, especially with all these major capital investments. That gives it a manageable payout ratio of 46.3%.
Yep, and there's no dividend growth right now, so we're just going to eliminate that right now, guys. But we can jump to a dividend yield currently paying 1.5% on the yield. 5-year average yield is 2.65%. Terrible. And then 5-year overall trend of the stock price is down 34%, guys. So here is Intel, and Bert and I, we've been able to successfully do a lot of covered calls on Intel by owning, over 100 shares each. And, Intel, it's like looking back, it's like, yeah, dang, we should have just said goodbye at $50 a share. Bert and I both agreed on
Mhm.
that. So if it starts to climb again, guys, just to give you a heads up again, not professional advice to you on research. I've owned this stock for a decade. I've owned this stock through the highs and the lows. And, right now it doesn't look like they're like being able to really keep up with a lot of, companies that are in the semiconductor space. And I feel like they can't have any more delays at all
No,
right now.
and the other thing we forgot to mention with them, not only are they getting hit with the delays, but they're also getting hit with the AI chip boom as well, too. So they're also falling behind in the AI chip sector, not just in the actual development of them, too. So the more negative news there has to Intel, like you, Lanny, the more it makes you just want to get out there, especially get out of Intel, especially if you see a pop up in that share price. I'm very much aligned with you on this one.
Yeah, so that's kind of where we're both at. Again, if I'm going to continue to hold in the 30s more than likely. Given that I own it still over 100 shares of Intel, probably still try to write cover calls as much as I
Yeah.
can just to get some of that dollars back. Um, and when it starts crossing over $40 plus per share again, because I'm expecting EPS to start increasing at least after this calendar year, looking into the 40s, in that 40 to 50 range to look for an exit.
Yes. All right, Aaron. So let us know what you think of Intel. Um, did you sell when it was high, closer to 50, or like us, are you just riding out and seeing what's happening with the company? Let us know in that comment section down there below.
Yeah, guys, if you haven't, definitely like this video, subscribe to this channel, keep saving, keep investing. Let's get to financial freedom, baby. And Bert, what else do we have to hit them with that sweet chin music?
Let them know. No, I'm kidding. All right. You're either with us or you're against us, Jack.
That was Bert, the Heart, and Link from the Dividend Diplomats, over and out.